Welcome to our video on maximizing money and impact through sustainable investing. In recent years, investors have become increasingly interested in aligning their investments with their values and making a positive impact on the world. One way to achieve this is through sustainable investing, which not only generates returns but also supports companies that prioritize environmental, social, and governance (ESG) issues. In this video, we'll be discussing the case for investing in sustainable companies, the benefits it provides, and how you can start implementing sustainable investing into your portfolio. Researching sustainable companies is an important step for investors who want to maximize their returns and make a positive impact on the environment and society. Sustainable companies are those that have integrated environmental, social, and governance (ESG) factors into their business practices and operations. By investing in these companies, investors can support businesses that prioritize sustainability and responsible business practices, while potentially generating strong financial returns. To research sustainable companies, investors can start by looking at ESG ratings and rankings provided by reputable sources such as Morningstar, MSCI, and Sustainalytics. These ratings provide an overall assessment of a company's sustainability performance and can help investors identify companies that align with their values and goals. Investors can also examine a company's sustainability reports, which detail their sustainability initiatives, goals, and progress. These reports can provide insight into a company's commitment to sustainability and their approach to addressing environmental and social challenges. Another important factor to consider when researching sustainable companies is their industry and sector. Some sectors, such as renewable energy and clean technology, are inherently more sustainable than others. Investors can also look for companies that are leaders in their industry and have implemented innovative sustainability practices. Lastly, investors can consider engaging with sustainable companies directly by attending shareholder meetings, participating in proxy votes, and communicating with company management. By engaging with companies on sustainability issues, investors can encourage positive change and promote greater accountability. In summary, researching sustainable companies is a critical step for investors who want to make a positive impact while potentially generating strong financial returns. By examining ESG ratings, sustainability reports, industry and sector trends, and engaging directly with companies, investors can identify and support businesses that prioritize sustainability and responsible business practices. Impact investing is a type of investment approach that seeks to generate both financial returns and measurable social or environmental impact. It is becoming an increasingly popular choice for investors who want to use their money to support positive change in the world. Impact investing is different from traditional investing in that it prioritizes the social and environmental outcomes of an investment alongside its financial returns. To consider impact investing, it's important to first identify the social or environmental issues that matter most to you. This could be anything from renewable energy to healthcare access in underserved communities. Once you've identified your priorities, you can begin to research investment opportunities that align with your values. One way to get started with impact investing is to look for funds or portfolios that are specifically designed to generate social and environmental impact. These funds may focus on issues such as clean energy, sustainable agriculture, or affordable housing. Another option is to seek out companies that have a strong commitment to sustainability and social responsibility. When evaluating potential impact investments, it's important to look beyond just the financial return. Consider the social or environmental outcomes of the investment and whether they align with your priorities. It's also important to assess the credibility and transparency of the organization or fund you are considering investing in. Impact investing can be a powerful way to make a positive difference in the world while still achieving your financial goals. By investing in companies and organizations that are working to address pressing social and environmental issues, you can help to drive positive change while also benefiting financially. However, it's important to do your research and approach impact investing with a thoughtful and intentional approach. Investing in green bonds is a way to support environmentally sustainable projects and earn a return on investment. Green bonds are fixed income securities that are used to finance projects with environmental benefits such as renewable energy, energy efficiency, and sustainable agriculture. Green bonds are becoming increasingly popular as more investors seek to align their investments with their values and support the transition to a low-carbon economy. According to the Climate Bonds Initiative, the market for green bonds reached $169.5 billion in 2020, a 9.5% increase from the previous year. One advantage of investing in green bonds is that they typically have lower credit risk than conventional bonds because they are issued by companies and organizations that have a track record of environmental responsibility. Additionally, many green bonds are certified by third-party organizations such as the Climate Bonds Initiative, which provides investors with assurance that the bond proceeds will be used for environmentally beneficial projects. Green bonds can be purchased through a variety of channels, including traditional brokerages, online investment platforms, and mutual funds that specialize in sustainable investing. Some companies and organizations also issue green bonds directly to investors. As with any investment, it is important to do your due diligence before investing in green bonds. This includes researching the issuer and the project being financed, as well as evaluating the credit rating and yield of the bond. It is also important to understand the potential risks and to diversify your investments to minimize risk. Overall, investing in green bonds can be a win-win for both investors and the environment. By supporting environmentally sustainable projects, investors can earn a return on their investment while contributing to a more sustainable future. When it comes to investing, more and more investors are looking for opportunities that align with their values and beliefs. One way to do this is by investing in funds that take into account environmental, social, and governance (ESG) factors. ESG funds typically invest in companies that meet certain criteria, such as having a positive environmental impact, promoting social justice, or having strong corporate governance practices. Investing in ESG funds can provide a number of benefits. For one, it can help align your investments with your values and support companies that are making positive contributions to society and the environment. Additionally, some studies have shown that companies that score well on ESG factors may perform better financially in the long run. This is because companies that prioritize sustainability and social responsibility may be better positioned to weather risks and challenges, attract and retain top talent, and build strong relationships with customers and communities. When looking for ESG funds to invest in, it's important to do your research and consider a few key factors. First, look for funds that have a clear and transparent methodology for selecting companies based on ESG factors. Additionally, consider the fund's track record and performance, as well as its fees and expenses. It's also worth considering the fund's overall investment strategy and whether it aligns with your own financial goals and risk tolerance. Overall, investing in ESG funds can be a great way to align your investments with your values and potentially generate positive financial returns over the long run. However, as with any investment, it's important to do your due diligence and carefully consider your options before making any decisions. Engaging with companies can be an effective way to promote sustainability and encourage positive change in the business world. By engaging with companies, investors and consumers can communicate their expectations and concerns and influence corporate behavior and decision-making. There are various ways to engage with companies, such as through direct communication, shareholder advocacy, and collaborative initiatives. Direct communication can involve contacting the company's management or board of directors to express concerns or ask questions about their environmental, social, and governance (ESG) practices. Shareholder advocacy can involve using one's ownership stake in a company to propose and vote on resolutions related to ESG issues. Collaborative initiatives can involve working with other stakeholders, such as other investors, NGOs, or industry associations, to address systemic ESG challenges. Engagement can be especially effective when it is focused and persistent, and when it involves constructive dialogue and collaboration. By engaging with companies, investors, and consumers can help identify opportunities for improvement, encourage best practices, and hold companies accountable for their ESG performance. This can lead to better risk management, enhanced reputation, and improved financial performance in the long run. Moreover, engagement can also help investors and consumers align their values and interests with those of the companies they invest in or buy from. By engaging with companies that share their sustainability goals and values, investors and consumers can help support and amplify their impact on society and the environment. This can create a virtuous circle of positive reinforcement, where companies that prioritize sustainability attract more investment and customers and become more competitive and resilient in the long run. In conclusion, engaging with companies can be a powerful tool for promoting sustainability and driving positive change in the business world. By communicating expectations, proposing solutions, and collaborating with other stakeholders, investors and consumers can help shape corporate behavior and promote long-term value creation. That concludes our video on maximizing returns and impact by investing in sustainable companies. We hope you found this information helpful and informative. By investing in sustainable companies, you can not only achieve financial returns but also contribute to positive social and environmental impact. Remember to do your own research, set your investment criteria, and select investments that align with your values and goals. Thank you for watching, and don't forget to like, comment, and subscribe for more informative videos.